Hey everyone, welcome to the channel. This first video update covers the big picture in markets, macroeconomics, and geopolitics. Over the past few weeks, I've been tracking insights from top analysts like David Rosenberg, Gareth Soloway, Chris Vermeulen, Gerald Celente, Luke Gromen, Doomberg, and more, and breaking them down by sector so you can stay ahead of the curve. Let's dive in. Let's start with the general stock market. Sentiment is getting heavy. A lot of analysts are all pointing to a market top forming this year with a possible crash or deep correction by the fall. We're seeing warning signs, weakening market breadth, rising unemployment in sectors like trucking and retail, and continued over-reliance on the mega-cap stocks. Larry Berman notes a rare 13-count signal on the SPX and says a recession is already baked in. Vermeulen is calling it a Stage 3 topping process, while Soloway says the market's in for a shock when it realizes the Fed can't pivot without reigniting inflation. Bottom line, defensive positions are building. Analysts are shifting to cash, gold, and low-beta assets. Over in the bond market, no one's excited about buying long duration yet. TLT, one of the main bond ETFs, is still seen as dead money for now. Chris Vermeulen is looking for a drop to around 80 before he gets interested. Soloway agrees. It might only shine once equities roll over. Meanwhile, the Fed is stuck between a rock and a hard place. Inflation is still too hot to cut, but the economy is clearly slowing. Most agree that the long-term case for bonds is strong, but the short-term entry point isn't here yet. The U.S. dollar, mixed views here. Short-term, we could see a bounce in the DXY to around 102, but Luke Gromen and analysts on Macro Voices are expecting long-term weakness. The reasons? Ballooning U.S. deficits and the global shift away from dollar dependency. Soloway and Vermeulen are watching dollar movement closely for signals on gold and risk-off sentiment. The medium-term trend looks lower, but don't be surprised by a near-term spike. Let's talk gold. Still the golden child of this market cycle. Nearly every analyst I'm following is bullish long-term, but most are waiting for a dip to get back in. Support levels around 3,100 to 3,200 are being watched closely. Jordan Roy Byrne is even eyeing 2,950 as a strong support. Gromen, Soloway, Celente, they're all expecting gold to surge past $4,000 to even $5,000 in the next 18 to 24 months. Long-term fundamentals are rock solid. This is where a lot of smart money is quietly rotating into. Silver's story is similar, but with more volatility. Vermeulen's calling for a possible spike to $38, but several analysts, including Francis Hunt and Gareth Soloway, expect a correction first. We could see silver pull back to $22 to $25 before its next move higher. Still, the asymmetry is there, especially long-term. Berman and Keith Richards even prefer silver to gold on valuation. Once gold breaks out for good, silver is expected to follow and potentially outperform. Now, on to energy, and this one's getting interesting. Short-term, oil looks weak. Soloway and Doomberg both expect WTI to fall to the $50 to $55 range. Trump is likely to push for cheaper oil to boost the economy and pressure Russia. Doomberg says oil supply is essentially unlimited right now because it's so politically controlled. Even natural gas is expected to drop, with analysts like Patrick Suresna targeting a move back to 2.8. This is not the time to be chasing oil, but uranium is a different story. Uranium is one of the few energy sectors that hasn't fully broken out yet. Suresna and others on Macro Voices are watching uranium stocks closely and see long-term upside as clean energy demand builds. If Trump brings back U.S. nuclear expansion as part of his energy platform, uranium could become one of the biggest winners of the next administration. Crypto fans, here's your update. Bitcoin's setting up a classic bull flag, and most analysts have targets between 100,000 and 135,000 this cycle. Vermeulen and Soloway think we may consolidate for a bit first, but the momentum's still strong. Francis Hunt warns we're approaching short-term resistance and he's taken some profits. Gromen is bullish long-term, especially as fiat systems get shakier. But keep in mind, if risk assets drop, crypto could correct too. Here's a wild card you're not hearing much about: Canadian oil and gas. Doomberg's predicting a Canadian energy renaissance if Trump wins. His plan? Use Alberta energy as a secure North American source, bypassing OPEC and Russia altogether. That means pipelines, LNG exports, and new U.S.-Canada trade deals. If this plays out, Canadian energy stocks could absolutely rip. Finally, geopolitics. Risk is rising again, especially in the Middle East. Gerald Celente and Doomberg both think a war with Iran is becoming more likely, unless Trump steps in and avoids it for political reasons. If war breaks out, oil could spike over $100, sending shockwaves through the markets. But the current thinking? Trump will lean on economic and energy pressure, not military action. Still, don't ignore this wild card. It could be the catalyst for the next big move. That's your market wrap for mid-May. If you found this helpful, hit like, subscribe, and drop a comment about where you're positioning your capital right now. Gold, cash, Bitcoin, uranium. I'll be back soon with another market summary. Thanks for following along, and see you in the next one.